Ladies and gentlemen, good afternoon. We are happy you could join us for Bigbank Investor Webinar. Today we are hosted by Bigbank Chairman of the Management Board, Martin Länts, and Member of the Management Board, Argo Kiltsmann. We will start with the presentation about the upcoming public offer of Bigbank subordinated bonds, and then continue with a live Q&A session. If you would like to ask your question to the company, please use the Q&A section underneath the presentation in Zoom menu, clicking on the Q&A button. Gentlemen, I am now handing it over to you.
Thank you and welcome to this investor webinar. Let's start from the legal disclaimer. So this presentation here today, webinar, is on an informational basis, and you should base your investment decision on the prospect. The prospect is available both in Bigbank webpage, investor.bigbank.eu. Also, it is available on the Estonian Financial Inspection website, www.fi.ee. You can also check the bank's historical results from Bigbank websites, from the annual results, also from the quarterly reports, and based on that you can do your investment decisions. The public offering is available for the investors within the Baltics, and the materials are not meant for sharing outside of the Baltics or also to the US. We will also cover some forward-looking statements here in the presentation, and in terms of that, you also should consider that future always has risks, and it is not as clear as the historic statements. But let's start the webinar. I am first of all glad to introduce us here. I am Martin Länts. I'm the Chairman of the Management Board for Bigbank. I have been working in Bigbank since 2013. And together with me here today is Argo Kiltsmann, who is also the member of the management board and is responsible for the financial area. So to give you a short overview of Bigbank, our assets are more than 1.4 billion euros. We are active in 9 markets. We have physical operations in Estonia, Latvia, Lithuania, Finland, Sweden, and Bulgaria. We also do have operation in Germany, Austria, and Netherlands. On these countries, we operate on the cross-border model. What means cross-border model is something how you can license your activities in banking. It means that in case you operate in one or another country on cross-border basis, you cannot have the employees physically working in this country. You can provide online services. Yes, you can have, and we also do have, for example, Germans working in Bigbank, but they work in our Tallinn office. If you look at the loan portfolio, it's over 1.1 billion euros. Also, our deposit portfolio is accordingly. We have a bit less than 500 employees, more than 100,000 customers. Bigbank is 100% Estonian capital owned. We have 2 owners who have been with the bank since the beginning in 1992, Parvel Pruunsild and Vahur Voln. They equally own 50% share of Bigbank. We have the branches. So in Estonia, we have the mother company. In Latvia, Lithuania, Finland, Sweden, and Bulgaria, we have the branches. And we also do have some daughter companies, subsidiaries, which mainly operate today for managing Bigbank's own real estate investments. We have done investments to the agricultural land. We have more than 4,000 hectares of land in Estonia, and we have a bit more than 1,000 hectares of agricultural land in Latvia. We also do have a couple of office buildings and some shopping premises. Bigbank's supervisory board has 5 members. There are 2 of the owners, Barbara Brunsild and Vahur Vool, and in addition to them, we have 3 other members, Andres Koer, Raul Eamets, and Juhani Jääger. If you look the product portfolio, then it is rather simple, and I believe that this is also one of the strengths of Bigbank, that we don't try to do everything, but this what we do very well. For the retail customers and private persons, we do offer loans. We have housing loans, consumer loans, hire purchase. We also do offer, for example, car leasing in Lithuania, and similar product also in Finland. If in Lithuania you can buy both new cars and the used cars, then in Finland we offer the leasing for the used cars. And it is also possible to place deposits at Bigbank, and 99% of Bigbank's deposits are actually private individuals. And on the other side, we have the corporate banking, which has also given the bank a very substantial growth in the recent years. And we do offer different loan products, mainly investment loans and the real estate development loans. So if you look at the portfolio, then it is, let's say, mostly 50-50 between these 2. We also do supplement our customer base with leasing products, and we do offer the deposits, but as said, currently the corporate deposits are on a very low level. And if we look at the timeline, then as said, bank was established as a company on 92, but yet back then we did not have the banking license. The banking license was acquired in 2005. Another big step in Bigbank development was 2009, when we started cross-border operations in Germany, and on German market we started to offer the deposits. There are also other banks from the Baltics who operate on the German, Austrian, and Netherlands market and are acquiring deposits from there, but they mainly do it through different platforms. Bigbank is the only one who does it directly, having its own call center, having its own web channels to service those customers. Until 2014-15, I think we were like known as a quite expensive consumer lender, and maybe it was known on the market that if you don't get the loan from any of the bank, then you can get it from a Bigbank. 2015 was the time when we really strongly changed our business model, and we really started to cooperate to compete on the Baltics market to universal banks. And I would say that today most of the customers, if they come to us to take a consumer loan, they get a better offer than they get from their home bank. In 2019, we we launched corporate banking, and this has given substantial growth for the bank recently. By now, like 30% of the loan portfolio is already corporate loans. In 2020, we established the housing loans, started in Estonia, later on also started to offer it in Latvia and Lithuania. Today, the housing loan portfolio is over 140 million euros. And I could bring out maybe one more big thing. It was in this summer when Moody's gave Bigbank investment grade rating. So Argo, maybe you will give us also a short overview of how we are doing financially.
Yes, of course. Hi, everybody. My name is Argo Kiltsmann. I'm a member of the management board now for 3 years, and I've been in Bigbank for 10 years already, and I'm responsible for finance indeed. So yeah, these strategic decisions, what Martin just showed, have influenced our financial results recently also very much, meaning that these corporate loans and mortgage loans, big growth there, have influenced our loan portfolio growth. So in 2021, our loan portfolio basically grew to 900 million euros, which was 55% growth compared to 2020. And this year, in the first half of the year, we have also grown to 1.1 billion euros, which is additional 24% growth. So we are continuing to have a very huge growth in our assets and especially in loan portfolio. Total assets, of course, have grown in correspondence with our loan portfolio. So this is very logical. How we are financing our operations, mainly with deposits. I will look at more closely at deposits later on the next slide. But let's move now to the revenues part. Our interest income was 77.5 million euros in 2021, and in the first 6 months of this year, we have reached already 45 million euros there. So growth compared to the first half of last year is actually also very big, 24%. Can be said that our results are very good. It has been a combination of mainly 3 things. One is good strategic decisions, and others are basically definitely our new banking technology, which we have implemented and which have enabled us to do such growth. And of course, we can't forget the most important part, our employees, which are really dedicated and huge value to our company, which have enabled us to have such results. It all together resulted in very good profit figures in 2021. We had a record level net profit, 35.9 million euros, and which also translated basically to 21% return on equity, which is in the sector, in my opinion, very strong result. This year's first 6 months net profit has been 14.1 million euros, and return on equity has dropped a little bit to 14.9, but we really expect that our second half of the year will be stronger, and we rather aim closer to 20% return on equity than 15. Over 15 is a very, let's say, certain thing according to our financial projections, but the exact number, of course, will be seen by the end of the year. Let's look at our loan portfolio also a little bit deeper. Top left corner, you can see the geographical distribution of our loan portfolio. Our 2 main markets are Estonia 37% and Lithuania 33%. Latvia is also a big market for us, 15% of our total portfolio. Next comes Finland with 9%, Sweden with 6%, and Bulgaria with under 1%. In Bulgaria, the number is also logical. It is our youngest branch. We only started there last year, and because of that, we haven't been able to grow very much yet. Our total loan portfolio, 1.1 billion, distributes 70% to retail banking and 30% to corporate banking. Corporate banking part has been continuously growing for the last few years, and it will continue to grow. And on the top right corner, you can see the loan customers by segment, where you can see that 54% still the majority is income-based loans, mainly consumer loans, also higher purchase. But 43% of our total loan portfolio already secured by real estate, which means it consists of corporate loans and also mortgage loans, which are our 2 new business segments, what we are really growing rapidly in. On the left bottom side corner, you can see again our loan portfolio growth figures, very good numbers to show. Yes, we have reached 1 billion euro level this year, and now it's 1.1 already. And on the bottom right side of the corner, you can see our loan portfolio quality, recent changes, where you can see that in 2020, we still had, let's say, in double figures percentage of total portfolio in delay. In 2021, it was already like closer to 6-7%, and now it is like 5-6% by the end of first half of this year. If you look at our, let's say, so-called bad portfolio or a portfolio which is at least 90 days in delay, it has also constantly decreased, and today it is about around 2% level of total loan portfolio. And these developments are really a result of a big focus by us, meaning that in the same time we are trying to grow a lot. We are not making any reservations in terms of credit quality. So we are really being successful there, and now the portfolio quality level is in a very strong position in our bank. Let's also look at how we are being financed. Until 2020, our main product has been term deposit. Since 2020, we also have launched a new product, savings deposit, and it has constantly grown a lot, meaning that our last year's growth has been financed mainly due to savings deposit product. What is savings deposit product is? This is a product which basically is very close to demand deposit, but it is like in 3 days time, a customer can get out of his deposit if he intends to do so. We offer it in our cross-border countries, Germany, Netherlands, Austria, and it has been really a good product. As in these markets, customers are really liking it and using it. Geographically speaking, Germany and Netherlands are our main two deposit countries, 48% in Germany, 33% in Netherlands, total above 80%, meaning that all other markets are much less important, but still we intend to offer deposit products in all our loan markets as well. We are not right now doing it in Lithuania, but start doing it soon there as well. Regarding deposit maturity split, yes, 42% of our total deposit portfolio is today with savings deposit, and regarding term deposits, most majority of our deposits are still like short terms, where 1 year and 2 year deposit altogether bring us more than 20% of our total deposit portfolio. Longer term deposits already are giving less in percentage wise. With that, I will end my presentation of finances and give word back to you, Martin, please.
Thank you, Argo. And now here is also the overview of our 2022-2026 strategy. So Bigbank aims to be growth-oriented, customer-focused bank, which aims for 20% return on equity. As Argo already brought, I think our capital returns have been really on a good level for all the recent years, and we have shown strong results, also taking into account that at the same moment that the bank has been growing really fast. We do want to also grow fast also in the future. That's why also we are issuing the Tier 2 bonds. And if we look at our strategy, then it is based on 4 pillars. First of all, we do expect our growth in coming years mainly to come from housing loans and corporate loans. Why from these products? Consumer financing is, of course, very profitable, but at the same time, the consumer loans, even if given out with 5-10 year maturity, then the real maturity will be often around 3.5 years, meaning that the portfolio is all the time rolling around. You need to find new customers, spend quite a lot of money for marketing. You issue the loans, many of them will be actually repaid already before the maturity comes. At the same time, if you take the housing loans, then housing loans have usually rather long term, 25, 30 years. And it means that the customer will be with you for a long time. It gives you a long-term stable interest income. And also you will have a long-term customer relationship. You can upsell in the future also different products for those customers. If you talk about corporate loans, then also what we talked was one of the things what we offer is different investment loans. In investment loans, it might be so that the contract term in some cases might be 3 to 5 years, but mostly they have rather long-term schedules. So they have a superannuity schedule, meaning that the loan schedule itself is 10, 15, 20 years, and it has basically after 5 years, the customer will conclude a new contract with you probably. How do we succeed in these two products is that we believe that we need to provide customer with reasonable product conditions. Reasonable product conditions often don't mean only price or loan maturity, but it is often the competition is about the small print or the contract conditions. And we try to be really wise here and not to put the things into the contracts, which actually from bank perspective at the end of the day don't even help to mitigate the risk, but might be uncomfortable for the customer. What we have been, of course, very good at and want to do also in the future is that we try to always find some customer segments on the market which are underserved and where maybe we can earn a bit higher margin. I think we are quite good in risk taking, and we also want to be risk leaders from that perspective in the future, that we take the risks what we do understand and we know how to mitigate. Often banks don't concentrate enough to understand actually what risks one or another project customer really has, and no is said often too easily, or unreasonable conditions are offered. And if consumer financing can be done in a really automated way, and we have built a really good banking system nest for automated loan decisioning and loan providing, then if you talk about housing loans, if you talk about corporate loans, then every customer is a bit different. Every customer has a bit different project needs, also consultation needs, recommendations. And this we believe we can do through good and competent employees. Then the second pillar in our strategy is actually regarding the topic how to reduce in the longer term the capital requirements for the bank. Banks have by the regulation for different products two possibilities: either to use standard approach for the risk qualification of different products and customer groups, or to use internal credit rating based approach. And what it means, for example, if you bring the housing loan, then in housing loan, in the standard approach, the risk weight is 35%. At the same time, the Estonian Central Bank allows to use the minimum risk weight in case you use the internal risk-based approach, 15%. And it is more than 2 times difference. And it means that if we have a good quality customer who has a low default possibility, at the same time, we also have a good collateral position. It might be that in case of the internal risk-based approach, we could use the risk weight 15% for the capital. At the moment, we use 35%. And what it means is that actually the customer, we need to kind of price with a higher price, even though we could earn the same capital return also with allocating a lower amount of capital. At the moment, internal risk-based approach is applied in the, for example, Estonian market by Swedbank SEB. We know that LHV is working on the project to provide it for also their credit portfolio. We want to do the same. For that, we see that we really need to kind of set appropriate targets. We need to market the products accordingly. Of course, internal risk-based approach might also in the bad portfolio quality and low collateral position also penalize you. And in such case, you don't benefit from that, but actually you need to put even more capital under the same loan portfolio. For that, you need to be wise. Of course, the data quality is vitally important in this because the rating will be provided for each and single contract. And these must be taken into use for the provisioning, credit decisions, and by the regulation. It is so that in case you have it in place, then this is 3 years monitored very closely by the regulator. And if the regulator after that is then satisfied with the results and gives you approval, then you can only take it into use. The third pillar is that we also do our own real estate investments. We do it in case we see good possibilities to earn good capital increase, and it also creates the synergy for our main business. As said, we have had a very huge growth in the corporate lending, and this comes, one part of it comes from the investment loans. In the investment loans, where we are very good at this, we are very good financing in agriculture sector, financing the purchase of agricultural land, forest, and we also good at good partner for different real estate investors who buy cash flow objects. Why we are good at it is because we also, by doing the investments ourselves, we really understand the market. If we talk about agricultural land investments, then we target long-term value increase of the collateral value, meaning kind of that we believe that agricultural land in the future will be much more expensive because it is like there will be no more land. The land itself will not grow in time. It is a limited resource. And at the same time, you know, there are more and more people who want to eat. Then the other, if you talk about real estate investments, then we look at the cash flow and the ability to provide stable and strong cash flow, and we evaluate collateral based on that. We do consider also investments in green energy for raising the capital return, and of course the investments into green energy are very important nowadays. If everybody believes, and also we do believe, that future looks green. We have already today there are like 2 windmills which are operating on our land. We also plan to have more windmills in the future. At the moment we are negotiating in the terms of renting out the land for different wind energy producers, in the terms that we both earn the rent on the windmill being on the land, and also getting the share of the electricity production. We also do use in this real estate investments external financing, meaning that we are also ourselves loan customers of another banks. And fourth and also last pillar of our strategy is that we want to enter to the daily banking product segment in order to tie customers, in order to increase the marketing efficiency, and at the same time provide the bank with cheaper financing. Because probably all of you know that even in the hardest crisis, usually your everyday salary money or the money which you use for buying milk from shop, it doesn't earn too much interest in the bank where you hold it. And at the same time, the bank can use it as quite cheap money for issuing loans. For that, we of course need to start offering payment services. We need to widen the product portfolio accordingly, have very well functioning digital channels, and to understand them like customer segments and where there might be this underserved customers. We don't want to start competing as some of the banks due to just acquire new daily banking customers. We still kind of see it as a product going together with our loan products and to supplement the current product offering and provide even, you know, better thing for our existing loan or deposit customers. So on these four pillars, our strategy is based. We also do have some long-term objectives. We really believe in good leadership, and I would really like that if some of our employees would be asked in 20 or 30 years that in which company he or she had the best leader, then he would say it was in Bigbank. We believe that good leader is as a coach. From one side, you know, he is or she is pushing you for the greater goals. At the same time, she is supporting you, training you, and helping you to achieve your goals. We believe that in banking, still the organization culture needs to be sales and business oriented, because banks are meant for business making. Taking into account all these last years and crisis what banking sector has seen, then often it is like more and more pushed that the banks would look more like governmental organizations and would be really kind of static. We believe still that banks should be as business organizations. We do work for improving our brand recognition, for recommendation index. We do grow both organically, but we also look for possibilities for non-organic growth. As said, we have our own banking system Nest implemented in all the countries of operations, which means that we can quite easily scale the products. If we launch some product in one of the countries, it is rather easy to establish the same product also in other markets. We do use lean and different technological solutions to develop good processes. If during the last strategy period we were mainly focusing on providing our customers a very good product, then now we are also improving the systems from the employee perspective. Why it is needed? It is needed that our employees would be more efficient and we could do more cost efficient operations. As said, climate neutrality is an important topic. We see it as an opportunity to build new products, to provide a new type of financing, to find new ways to generate revenue, and we don't see it as a restriction. And cost efficiency in banking is important, because if you are not cost efficient, you don't earn money. So this is our strategy. Now, if we continue, then I would also like to introduce you the terms of our bond. So maybe, first of all, a quick glimpse on the right side of the slide to the current own funds. It is in total 183.4 million euros, out of which 163.4 million euros is Tier 1 capital, which is paid in share capital, retained earnings from the previous period, from which is deducted the immaterial investments. And we also do have a small part of Tier 2 capital. In absolute numbers, it is 20 million euros. These have been placed directly by LHV pension funds in 3 tranches. First of them was done in 2017, which will also come to its maturity at the end of this year. We have a, let's say, 5-year call option. It is also kind of actually like a 10-year bond, but it comes to its 5-year call. And another 10 million tranche was put at the end of last year, and 5 million euros was placed in this year, May. And as said, these all are actually 10-year bonds, but have a 5-year call option. And why this 5-year call option is important in the subordinated bonds is that as a subordinated bond is a tier 2 capital instrument, then by the regulation, you can use it from full value as a capital instrument for 5 years. And after that, it starts to amortize, meaning that from the last 5 years, it will amortize to 0. And it means that you still have, let's say, the same interest cost for the instrument, but you can take after 5 years less and less of it account as tier 2 capital. If you talk about like why we do issue the bonds now, it is for the reason that we want to continue our growth mainly in the housing loan and corporate loan sector, but we can also use these bonds for repaying previous bonds, but as said, only 5 million euros of it comes to the call date at the end of this year, so it also cannot be done in a larger amount. But Argo, maybe will also give more detailed overview of the terms of the planned bond issue.
Yes, let's concentrate now on the left side of the screen. You are probably already digging into the numbers, but I will shortly go over the terms as well. It will be the same kind of bond like Martin just explained, 10-year maturity, but the early redemption possibility after 5 years. The reasons also taken out by Martin, we cannot fully use it as a capital instrument after 5 years. So it is possible that we intend to redeem it after 5 years. And I can even say it's likely, but of course the term itself is 10 years. Yes, the issue size is 10 million euros, but we have the possibility to increase it up to 20 million euros this time, and total program size is 35 million euros. Next issue will be done next year. So right now, this year, only possibility to have the bonds is to have it right now. Nominal price 1,000 euros each bond, meaning that also like smaller retail investors are definitely capable of having at least some bonds. Interest rate 8%, which I would consider compared to a market also very attractive one. So it is a good way to have the investments done and put your savings into really earning some decent interest. And also important to notice is that yes, quarterly payments, so 4 times per year you can really earn money. First interest payment still yes next year March, so half a year interest paid up then. And we are offering in all 3 Baltic countries, Estonia, Latvia, Lithuania, and we definitely tend to list it in Nasdaq Tallinn Baltic bond list, meaning that it is also tradable, highly likely. So if you need to get out of your investment also before the 5 or 10 years term, then it is possible to also trade it in Tallinn Nasdaq. And yeah, first trading day should be 22nd of September or a date close to it. So already soon we will be first time in history, basically a public company, meaning that our bond will be tradable for the first time ever in Baltic Tallinn Nasdaq bond list. So important date for us, important milestone for us, and we are really doing it with a very interesting and attractive interest rate bond. So that's it for the terms.
Thank you, Argo. And I believe this is also the end of our presentation. So now we are open for all the questions.
Martin, Argo, thank you for providing information on the bond offering and on the bank. We have not yet received any questions from the audience so far, but if there are any, this is the right moment to ask them. So for that, please use the Q&A that you can find underneath the presentation. Meanwhile, let me remind you that the recording of this webinar will soon be available online. Please follow Bigbank announcements to stay up to date with company's news, or you can also visit Bigbank's investor page, investor.bigbank.eu. As there are no questions, we will now be closing the call. So thank you once again for the presentation. Participants, thank you for a valuable hour spent together.
Thank you.
Thank you.